Hi everybody, in this video I'm going to explain the difference between direct and indirect taxes. So if somebody says something is a direct tax, what does that mean? An indirect tax, what does that mean? Indirect taxes, if we start off on the right hand side here, are taxes which are paid on goods and services. So when a good or a service, a product, is bought, it's a tax that's added on. So it's added on to the price. And depending on which country you're in the world, it will show on the price tag, or sometimes you'll have to pay for it when you get to the till and pay for your product. In the UK, an example of an indirect tax would be value added tax, or VAT. And this is paid on most goods and services unless they're zero rated, which means they don't have VAT on them. A direct tax is a tax on income, and it's also a tax on profit. So if you're an individual, you would pay tax on your income. So for example, income tax. That is a direct tax. And for a business, you would pay corporation tax in the UK on your profits. And a simple way of understanding why these are direct and these are indirect. Direct, this money, the tax on the income or the profit, is paid directly by the individual or the person who employs them, or by the business. It's paid directly to the government. Whereas an indirect tax, it's a little bit as if you have a middleman, because you have the person who goes to the shop, and then when they're in the shop, they buy something, but the shop pays the tax to the government. And this is indirect, because actually the product is more expensive for the customer. They're really paying the tax. But the tax goes through the shop to the government. So it's indirect. The person isn't paying the tax straight to the government. It's an indirect route that goes through the shop or the person that they're buying the product from. So that's direct and indirect taxes.